Oracle beat earnings, announced $70 billion in AI spending, and still closed down 8.5%. Same company, same numbers, two opposite headlines. The morning said the AI boom is back, the close said the AI trade is cracking. Both ran today, both can't be right, and neither was. That 8.5% drop was the single most honest number of the day. Check what else flooded your feed in the last 24 hours. Chip stocks ripping higher, the largest IPO in recorded history priced after the close, a quiet enterprise deal between OpenAI and Oracle, and a survey announcing that most people can no longer tell real from fake. 4 stories, 4 sets of headlines. And in at least 3 of them, the framing you most likely absorbed was misleading. So let's run them through a business filter, not a hype filter. Start with the survey, because it explains the whole problem. Malwarebytes published it this morning. 1,500 adults across the United States, the UK, Germany, Austria, and Switzerland. 85% said they can no longer tell what's real from AI-generated content. Up from 66% just last year. Half had run into an AI-driven scam in the past 12 months. Read that carefully. The audience consuming AI news now admits it cannot verify AI news. So here's the framework I use. 3 filters that distort almost every AI headline before it reaches you. Filter 1, incentives. Who gets paid when you click? Filter 2, narrative. Markets need a story, even when the data doesn't cooperate. Filter 3, verification. The collapse of our ability to check anything, which that survey just quantified. Today, conveniently, delivered a textbook case of all 3. Let's take them in order. Incentives first. As of tonight, Google's Gemini 3.5 Pro still has not shipped. It sits in a limited enterprise preview, nothing more. Yet the internet is stacked with launch guides, countdown articles, even prediction markets taking bets on the release date. None of those pages know anything Google hasn't said publicly. They exist because anticipation is monetizable. A rumor about a frontier model earns clicks today, whether or not the model ever ships this month. And notice the asymmetry, because it's the engine of the whole machine. Publishing speculation costs nothing. Publishing a correction earns nothing. So the supply of AI speculation grows without limit, while the supply of verification stays flat. That's not a moral failure of journalists, it's basic supply and demand, and it predicts exactly the feed you're scrolling tonight. And that's the tame part. Wait until you see what the markets did with the same logic today. Filter 2, narrative. Thursday's tape looked euphoric. The Nasdaq jumped over 2.5% to nearly 26,000. The S&P rose 1.75. Micron soared 12%. Intel 10 on an analyst upgrade, SanDisk 14. The headlines wrote themselves. The AI boom is back, doubts erased. If you read only that, you walked away convinced artificial intelligence just reignited the entire market single-handedly. Except the biggest driver of that rally had nothing to do with AI. Stocks were rebounding from a 2-day sell-off tied to Middle East tensions, and Thursday's surge followed signs of de-escalation between the United States and Iran. Even the inflation print came in hot. Producer prices up 1.1% in a single month. Geopolitics moved the market. The AI label got stapled on afterward, because AI is the story readers expect. Now the centerpiece. Oracle. The company beat earnings expectations and revealed plans to spend roughly $70 billion on data centers and computing equipment next year. Pre-market, that number lit the fuse. Chip stocks surged on the prospect of $70 billion flowing into AI hardware, and the morning's framing crowned Oracle the spark of a new AI rally. One company's capital expenditure line, recast as proof the boom is unstoppable. By the close, Oracle itself was down 8.5%. Same company, same earnings beat, same $70 billion. The investors who actually own the stock read that spending plan not as fuel, but as a bill. $70 billion of cost that has to earn a return someday. So Thursday produced 2 opposite headlines from one set of numbers. And most readers only ever saw one of them. But it gets stranger. Or look at Nvidia, supposedly the center of gravity of this entire boom. On a day chip stocks exploded. Nvidia rose just over 2%, closing near $205. Outpaced by Micron, by Intel, by SanDisk. The narrative says Nvidia leads every AI rally. The tape says that on this one, the supposed leader trailed the pack. A small detail, but it tells you the story, and the data have quietly separated. Then, after the close, the biggest number of the day, SpaceX priced its IPO at $135 a share. 555 million shares, a $75 billion raise. A valuation around $1.77 trillion. The largest initial public offering in recorded history, and it starts trading tomorrow morning. The framing you'll see everywhere tonight. Limitless demand, rocket fuel for the entire AI and tech complex. Here's what that framing skips. Money is a supply and demand system too. Analysts are already warning that investors may trim positions in other megacap tech stocks simply to free up cash for SpaceX shares. A $75 billion raise doesn't just signal demand, it absorbs demand. The record IPO everyone is calling proof of the boom could mechanically drain the very AI trade it's credited with confirming. And here's where it gets really interesting, because while all of that noise was running, the most consequential AI story of the day got almost no coverage. OpenAI and Oracle announced that enterprise customers will soon be able to spend their existing Oracle Cloud credits directly on OpenAI's frontier models and codecs. No demo, no keynote, no condom clock. Just procurement plumbing. And plumbing is precisely where the real money in this industry now moves. Step back and the real picture sharpens. The AI economy in mid-2026 is being decided by infrastructure budgets, cloud credits, and enterprise contracts, $70 billion capex lines, credit systems that let a chief financial officer buy frontier models without opening a new vendor relationship. None of it photographs well. All of it compounds. The headlines chase whatever flashes. The actual industry is being built in line items nobody screenshots. Which brings us back to the number I promised you. The most honest one of the day. Oracle, down 8.5%. The company at the very center of AI infrastructure fell hardest on the very day its spending ignited an AI rally. That is the market beginning to price AI spending as a cost that must earn a return, not as magic. The hype machine couldn't process that, so it simply ran both stories, and let you pick whichever one you already believed. So here's the filter. 3 questions before you believe any AI headline. 1. Did it actually ship, or is it a date? Previews and launch guides are anticipation, not product. 2. Is that big number revenue or a promise? Spending plans and valuations are claims on the future, not results. 3. Who profits if you believe this? Trace the incentive, and half the headlines in your feed deflate on contact. Run today through it. Gemini 3.5 Pro. A date, not a product. Still unshipped tonight. Oracle 70 billion. A promise, and the market is already discounting it. SpaceX at 1.77 trillion. Real money, priced tonight. But watch what gets sold tomorrow morning to pay for it. And that 85% who can no longer tell real from fake? Membership is optional. 3 questions keep you out of that statistic. If this saved you from even one bad headline, the like button costs you nothing and tells the algorithm this kind of analysis deserves reach. Subscribe. I run the next day's AI news through this same filter every single day. And drop a comment. Which headline almost fooled you this week? Someone scrolling after you needs to read those answers. Share this with the friend who forwards you every AI rumor. See you tomorrow. Alright, that wraps it up. Like, save, subscribe, and we'll dig deeper next time.